Hi, I'm Mel Lopez, Chief Economist for ASEAN.
And I'm Peter Lundgren, founding CEO at Lundgren's Capital.
Welcome to Sound Economies with Mel and Peter, an East Meets West podcast by Lundin's Investor Insights. Here we share what we're focusing at in economies and financial markets from the developed and the developing world. Hi, Peter. How are you today?
Hi, Mel. I'm doing good. How are you doing? How's business?
Well, it's rainy here in Manila. Also, a lot of things going on at once. We're now just recently published an economic spotlight article on Thailand's clean energy industry. So that's already up and readable on the Lundin's Investor Insights website. A very interesting topic as well for ASEAN. So we're going to talk about some Southeast Asia countries today, Peter. Just to quickly run through what we have on today's episode. First, we'll look at the recent rally in Chinese stocks and what's behind that. And then, of course, the clock is ticking for trade deals with the US, and there have been a series of negotiations over the past week. So we'll also look at that and the results of those negotiations. We'll also talk about what will greet European investors after the holiday, the summer holiday. And as
Mm,
usual, we'll look at the global outlook from our observations on the economies that we monitor. So
mm,
I'll jump straight ahead to the China discussion. There has
mm,
been a strong rally for Chinese stocks over the past week. And year to date, the Hang Seng Index is actually up 28%. So very strong. And just over the past week, this has been led by the technology sector. So
mm,
the story is actually quite surprising if we look at it just at a cursory glance. The optimism is already coming from the mega dam project that China is building in Tibet. It's
mm,
$167 billion worth. That would be the largest hydropower source in the world once completed. So,
mm,
um, it sounds kind of odd when you look at it at first, but it's really, I think it's more of a show of force, a show of might for China
mm.
that they can and will finance this and build this quickly,
Yeah.
even in the middle of what was expected or what was planned to be uh, a period where China is being targeted by mega tariffs from the US. There has been proof that they are able to weather that. And given the recent trade deals with the US, China was ahead of many countries actually. That the worst is over already for China, and they have managed to keep growth at above 5%, even when Trump is trying to go after them, basically.
Yeah, yeah. A couple of fascinating stories. The stock market itself is yeah,
Mhm.
truly it's also the Chinese market, as you say. It's basically already now pricing in that it seems to be going in the direction everybody will get a deal with Trump or US or how we how we call it. Concerning the tariffs and so far, it's wherever we look, stock markets are happy about what happened. So, and it doesn't really harm business too much. And of course, this hydro
Power.
project in China, yeah, it's enormous. It is enormous. I say it's and such enormous projects are always impressive. Yeah. Now, if we turn a bit critical towards China, because every time we they come up with public financed infrastructure projects, we we always we've learned for decades back this is also the way to pump up GDP growth. Yeah.
Right.
So what we also look into, Mel, is what we discussed and have discussed.
Mhm.
If this compensates a bit for, after all, a bit of headwind for the Chinese economy. But the headwind is not necessarily originating from sort of a Trump headwind. It can just as much be that the domestic consumption is not
Weak.
really it's not really taking up as it should be. It is again much more a domestic game when we're looking at China. The domestic economy is so much more important than the external economy for China. But this might be a bit sort of also as the project might compensate a bit for some growth. That could have it would have been fantastic if that would have been originating in the private sector. That's what we like. But nonetheless, and but we are observant towards that angle. Decades ago, we saw it every quarter. That was how the Chinese government simply managed the growth, and that was to upgrade or downgrade infrastructure projects.
Mm-hmm.
And it sounds odd, but it is the truth that they are in China so fast, simply so fast in converting infrastructure projects into reality. If it's approved and decided, it's amazing that after 3 to 6 months, um, things are so much up and running in of the construction, then it is already measurable in the GDP growth.
Many
It's
countries will be jealous.
as we're talking about in some Western countries, it will take 4 to 5 years. Yeah, talking about these fascinating issues. A year or 1.5 years ago, they were warming up for more infrastructure projects, also public financed.
Mm-hmm.
And that was also when there was a bit headwind for the GDP growth. I saw the preparation, also how provinces were told to be prepared. So
Mm-hmm.
when it was simply you could imagine on the day that these things were approved, they had an army of people simply starting on the project on day
Ready
one.
to build.
Everything was planned beforehand. So there's enormous as this takeoff
Mm-hmm.
is brutal, and it's fascinating. And this is how they do it. But that is a bit sort of a conversation. That's just sort of from our side a critical eye on what's going on. Nonetheless, the project is fascinating. It's impressive. But also we of course see if it substitutes other types of growth in the GDP numbers.
Mm-hmm.
Good. Yeah, Mel, I shouldn't interrupt too much.
Yeah, but on China, we do like to see that consumer spending would be up more convincingly as well. Of course, one-off projects are nice. But as you mentioned, given how fast it takes off, the impact is also could be short-lived. So the more sustainable growth really that we want to see and we want
Mm,
more of is private sector growth. There has been some statements from the CCP government that they want or they will be more friendly towards private sector, as in the real privately funded companies. So
yeah.
we want to see more of that in the coming months and years from mainland China, Peter.
Great. Let's go for
Let's
that.
go to the other side. From the trade negotiations this time, a lot of countries are scrambling to come up with a deal with the U.S. Of course, the August 1 deadline set by Trump, although it has a moving deadline, it will be a week from now. So a lot of countries are scrambling. Over the past few days, we've had the Philippines secure a negotiated deal with the US. Also, Indonesia, both are getting a 19% tariff on their exports to the US. And then we
Mm,
also have Japan at 15% tariff rate. I think the common thread here, except for the Philippines, was that most countries were able to secure a rate that's about half of what Trump initially threatened to impose. So
mm,
Indonesia was at 32%, they got 19. Japan's 25% originally, and then they're getting 15. The Philippines is an odd case. We were initially given 17%, which was threatened to 20%, and our compromise rate was 19%. So that was kind of odd. There has been actually I that sounded like barely a win for us in a sense that what we get is a 1% discount so to speak, but we are promising greater access to US goods, so different from what we saw with other countries. I mean, Vietnam promised the same. That was what I said an episode ago. but they got a big discount on their tariff. So
Yeah.
the negotiations really vary from partner to partner.
Mm.
What I've observed with the bigger partners that US dealt with was a big component of the negotiation is a promise to invest more in within the US as far as the private sector players of that country is concerned. And that's something we cannot, like smaller developing nations cannot really promise in terms of size of investments that they can commit. So I think that that's the difference.
Mm.
But here we are. At least there has been indication, at least from the Manila side, that further details are being negotiated. But I think the 19% will stay because the US will likely move on to other bigger partners, Peter.
Yeah. It's interesting to see the results, as you mentioned, and when we've had these periods with the US trying to negotiate trade deals around in the world, this is of course sort of a global one. It's a big project, so to say. Earlier, when we go decades back, maybe 30, 40 years back,
Mm-hmm.
it's the world were in terms of trade slightly more. It was easier to overlook because we had as a Western emerging advanced economies, Japan, Western Europe, US,
Right.
Canada, Australia, New Zealand. And then we had the outside bloc, yeah, the Soviet bloc. And
Mm-hmm.
then there were, you could say, at that time, it was actually not emerging markets. It was much more frontier market countries. It was easier to see who to speak with, yeah. Also from a
Mm-hmm.
US perspective, as it was there was as it's also why the G7, G5, G3, whatever we as a way started.
Groupings.
Yeah,
Yeah.
why it was created because it was so easy to have these conversations within that round to try to get the trade imbalances fixed. And that happened either via different deals or via currency, really as a foreign exchange moves and readjustments. So now it's a bit more complicated. Luckily, we've got a lot more countries participating in the global trade, and a lot more countries with families that are therefore also moved up in the middle class and are getting richer. So the wealth is distributed across the world. So, so to get that trade negotiations has also become a bigger project. But anyway, if we go 30, 40 years back, or if we take the approach today from the American side, it's pretty naive, I would say. Back then, there were enormous trade deficit towards Japan. What was very much in focus from the American politicians were cars and car parts. They simply want Japanese consumers to buy these very big US
It,
cars,
yeah.
swallowing truckloads of fuel, whereas that was actually where Toyota and all the Japanese
Mm-hmm.
car producers were sort of coming, really moving forward with the small cars and very efficient cars, smart cars, whatever. And secondly, US didn't produce cars that were steered in the right side, which is the case in Japan.
Mm-hmm.
It was so fantastic to follow these trade negotiations. They were so naive. And a bit we see the same. If we look into the trade, the tariff agreements now, what have happened in Japan is that US want Japan more open for US food as a sort of food in cars again. It is of such a low quality that nobody wants to buy it. So that's fantastic, yeah. So it won't succeed really, this thing. And again, they're trying to pressure a country like your Philippines, Indonesia, foreign direct investments. It is a wrong way around. Yeah. What would be more interesting for US investors and American companies were that the Philippines opened more up for foreign ownership of Philippine companies. because
Right.
it is in the Philippines they can gain very high growth rates. The Philippines has there's no money, so to say, in big scale to invest into the US.
Yes.
It is just bullying small countries. Yeah. The results are, I would say, are weak, and they have no as a sort of really strategic thinking behind. This is the assessment so far. But let's see where things are heading. Yeah. Any sort of, do you have any sort of first-hand feeling from the business sector in, let's say, in the Philippines? Are people happy or they're unhappy? So where sort of where's the mood?
There is general disappointment with the rate. If other countries were able to secure at least half of what was initially threatened to be the rate, why are we unable to do that? I think that's the general question. Although, what I'm looking at on the other side of it is we may have asked for more military assistance more than business deals because that's what Trump was basically talking about when President Marcos and President Trump met yesterday. So
Yeah.
I think the concession was kind of different in terms of approach because, of course, there are other developing nations negotiating with Trump also, and they don't have a lot of extra investments to commit to the US, but they were able to secure better rates. Although one could say that Vietnam at 20%, we're still slightly better off at 19%, but that's what I'm getting so far. But we may have negotiated on different terms than them. So I think that's what happened in that scenario. So I think though that it's really boiling down to countries like the Philippines not having enough bargaining chips against the US. So yeah, you're right. It's bullying basically.
Yeah, it will be interesting. It will also be interesting to see if there are big differences in some tariffs, because then the trade across the globe will zigzag and try to find the cheapest way around. But let's see
Mm.
where the different tariffs they end up. You know.
But Peter, though,
So
we have yet to see major deals sealed by the US. Like we've seen Canada basically hesitant to aggressively pursue the negotiations. The European Union has not yet come up with a deal, although there are reports that they're close to it, Peter.
yeah, that is as you say, this is one of the really big ones. Yeah, that
Mm-hmm.
is to get the transatlantic deal closed. And you say it's a bit sort of surprisingly quiet around sort of there's no yelling, yeah. Truckloads of rumors and also sort of what I would say partly official some statements. A lot of what the journalists they got is that there is sort of a 15% tariff deal, yeah, in general. So many actually observe it as sort of what they yeah it's just where it is, and it won't hurt business a lot. Imagine since the start of this year, the US dollar has moved 20%. Yeah. So that is actually more than the tariff itself. So 15% is not scaring anybody. So the only consideration is if can it really just be sort of that straightforward, or will we 2 days before the 1st of August, then then everything breaks together and whatever yeah, whatever happens, somebody went sour and other person are angry. I don't know. It is actually, but it's going extremely smooth right now. As a very quiet, extremely quiet. Never seen something that quiet as this. So right now, the primary scenario is actually 15%, and that's it. Um, do I have this feeling that something comes across? Yeah, there's a risk at least, yeah, for sure. But Mel, this is basically if one of the big ones is getting sealed, then we also have talked about a couple of sessions that what is actually awaiting the investors when they're back from holiday. And
Mm-hmm.
that is, again, we know it's particularly the Western country investors that are out on holiday or getting out on holiday. August is a big month, yeah. So what is awaiting sort of in, let's say, in 1 month's time or a bit more than when people are sort of
Mm-hmm.
coming back on the trading floors, in the offices, and whatever. Yeah. And a lot is indicating that there will be a new tariff world waiting, so to say. As there's done. I believe there have been a lot of talk from the Oval Office about that they have done hundreds of fantastic deals,
Yes.
tariff deals that will improve the situation for the U.S. economy enormously, and the deals also open up for export of a lot of U.S. goods. And as mentioned, okay, so who are going to buy them? That is the key. But we probably have seen that a long sort of marketing series of these kind of sayings.
Same.
But anyway, reality is that there's a new tariff world, and there's also a new approved, you could call it economic reform in the US. The as a
The one
the
big
the
beautiful.
big beautiful deal that is, in my view, not beautiful at all. I think
Right.
as we are already now seeing the market reaction on the tariff deals, as a stock market and investors are actually quite relaxed. Yeah, it's fine. It won't hurt companies extremely. But I could see it as a Trump instrument. That he has sort of now a grid where you can see each country A, B, C, they have this tariff they pay into US. And if a country misbehaves for some reason, or a politician there says something bad about Trump, or there is a prime minister not sort of doing what Trump wants, then he says, okay, just like a sort of long stick, like the teacher in the classroom saying, "Dang, I hit you on the head, and you know that your tariff is not 15% anymore; it's 50 now." Then it's 50, and take that. It will be 50 until you behave again. I could imagine sort of all these crazy situations. Either country is hit or sector is hurt or whatever. Yeah. So we will have these very strange movements. Nobody can be secure at any time. Wherever you're invested in something, it can be so it can overnight be hurt by a sort of a tariff sort of punishment. Yeah, I could really imagine that happen. And that is just how to say non-predictable.
Hmm.
If investors feel that there could be a sort of an upcoming upcoming dispute, maybe you can feel it a couple of days before, 48 hours before, then you can say, okay, out of the positions, yeah. Uh, that'll be a very strange game. I cannot, if I recall 40 years back in the market. I cannot say if this should be the case that we had a similar sort of situation, but I could imagine it happen actually, and it will more or less just be a volatility risk to positions, and probably hard to predict. Yeah, that is one thing I could see people returning to, and then
Hmm.
the big beautiful deal will all of a sudden play a big role because the tariff fear is getting sort of solved back, and then the big beautiful deal, and that will actually hurt. It will weaken U.S. Sort of understanding among many investors.
Hmm.
It is because it's more risky, also long
Right.
term. And then there's a political risk. We have learned that the US is, as depending on who you are, where you are, but it's a difficult partner. Let's put it this way. Then we've been very nice, and that means that other parts of the world will start to move faster forward. That we will look into an ongoing political reshuffle globally, and that is some of the things that people will revert to. It's not making investments
Easier.
more easy.
Yes.
It makes them a bit more complex. But I think that is some of the key themes actually that the people are reverting to. And but we can say it will be more interesting. It is for sure interesting. There will be a lot of things and a lot of opportunities, and that's important. That's what we like.
Hmm. So for our
So this,
global
this is
outlook,
yeah, yeah, yeah.
For our global outlook, Peter, we can easily say that these are more exciting times. Not necessarily good exciting, but definitely a lot for investors to watch out for. Um,
Mm.
in the past week, there has been some uptick in like optimism about trade deals because several countries have managed to negotiate with the US. But as we said, of course, the larger partners are still on the negotiating table. And as long as these are not resolved, the uncertainty is there. And of course, we've known that Trump likes to act fast, and we could wake up to higher tariffs one day and then roll down the next week. So that's the kind of economy, that's the kind of financial markets that we're gonna confront over the next few months, Peter.
Yeah, it is. But if we take the weekly global outlook and is it a more cloudy world? We'll say no. Actually, there's a lot of as we are happy with the sunshine we can see. We see a lot of sunshine.
Mm-hmm.
Again, we see the world as stronger than many, and we are happy being overweighted risk. So, and that is the whole way around. Yeah. And for us, it just confirms that the world is actually pretty resilient, and that's good for investors.
Right, Peter. So that's all we have for this episode. Thank you, Peter, and thank you to our listeners as always.
Thank you. It's always a pleasure.
We'll be monitoring global developments and we'll share what's interesting in the next episode of Sound Economies, Mel and Peter on the Global Financial Markets, a podcast by Longines Investor Insights. Thanks for tuning in. For expert insights on the go, download the Longines Investor Insights app for free. For investors, we offer very exciting and high quality alternative investment funds, including our top rated Mutual China Fund. To know more, visit longinescapital.com.